Hello and welcome to another update video about Ethereum. Let's just zoom out first a little bit. Let's go to the 4-hour chart. Just wanted to explain here the movement of the April high. Obviously, if you followed the channel, you'll know that we've been talking about this decline as a correction within a larger wave 2. And the expectation was to turn around somewhere in that yellow support area, which has been on the chart for months now, I think. So the idea was to get into this structure in some kind of a 3-wave move. We reached that 1660 target that I've been talking about. The golden ratio could have gone a little lower, but we saw the turnaround where it needed to turn around in the yellow support area above 1535, which is the 78.6 Fibonacci retracement. As long as that level is holding, we can still talk about a third wave to the upside with decent confidence and give it a decent chance that we see a third wave rally to the upside. And we might already be in this third wave rally. I have to say that Ethereum is a little weaker than Bitcoin at the moment. If you look at the Bitcoin chart, Bitcoin is already basically up here. Yeah, so it would have moved a little longer. Again, not a surprise if you know our ETH BTC chart, which is currently in a downtrend, and the forecast of lower, of Bitcoin outperforming Ethereum. The idea is at the moment that we could be in the early stages of a larger third wave to the upside, which could take us sort of into the $3,000 region. Why is that? That is simply because, first of all, if we assume that we had a wave 1 between March and April, then this is a measurement we can take. We go to the low of the wave 2 now that we have the confirmed low in place, and a target for a third wave, that is the minimum target, would be the 1.618 extension at around about $2,900. But this would only be the third wave. We should then get a fourth and a fifth wave, so it would eventually take us higher. And that fifth wave would only be the green third wave, because we have a series of 1-2 setups as explained in the videos before. Now, okay. Let's take a look at what is actually happening here. So at the moment, there is at least a decent chance that we are pushing higher from here, especially as long as we're holding relevant support. We're going to talk about that in a minute. A few days ago, we highlighted here this inverse head and shoulders pattern. Normally, I don't like these patterns, but when we see them, we can talk about them. It was in line with a possible bullish Elliott wave count anyway. The idea was if we break above that 1765 level, we can push quite significantly higher to around 1900, which happened. And now I just want to bring that up because we have another possible inverse head and shoulders pattern on the chart, which is pretty much in line with the Elliott wave count. So that's why I bring it up, because you have your, however you want to call the left shoulder, a bit of an ugly one, maybe someone with two shoulders. But anyway, left shoulder, head. And then if we now get that wave 4 setback that we've been talking about, which we probably see right now, then this could be the wave 4, and it may then do a bit of a retest of resistance here at 1930 and push higher. Okay, so that is certainly something I'm observing. Definitely something interesting because it's also in line with the Elliott wave count. So now that we could be in a third wave, let's zoom in. First of all, before we do that actually, the third wave should unfold in 5 waves. You see the roadmap here on the screen. And at the moment we could be in this first wave, which would then be followed by a more decent setback in a wave 2. Okay, now if I zoom in a little bit, we can see that the wave 1 is still pushing higher. We had within the wave 1 a wave 1, because also the wave 1 is a 5-wave move in an ideal world. So we have a wave 1, we have a wave 2, we have a wave 3, which reached the 1.618 extension minimum target. That's good. And now we could be in the wave 4. We've been talking about that yesterday, and that is playing out now. The idea is that ideally, in this wave 4, we are holding the 1820 level. Yeah, so it could come down a little lower in this wave 4. Relevant support is 1846 and 1819. It's currently holding the 23.6 retracement level at 1880, but it has failed so far to rally impulsively off the lows. So expectation at the moment would be to go down a little lower, maybe throughout today, maybe even tomorrow. Don't know how long this wave 4 will take time-wise. But because the wave 2 lasted, it took from the 17th of June and then bottomed around the end of the 19th of June, so more than 2 days. And this only started yesterday, so I wouldn't be surprised to see the wave 4 stretch into Saturday. That's often what we see on the weekends, But we'll see. Eventually it just needs to react to this support area, and then when it takes off and breaks above the last swing high here at 1932, we have decent probabilities that the wave 5 has started. The subwave structure of this wave is a little unclear to me. I would say the best situation would be if wave A bottomed here on, well, yesterday that was, at around 1864. The wave B is still unfolding, could even be a triangle, and then a C wave down is still coming. Because we want a decent wave 4, we don't want a very shallow one. If we get a decent wave 4, we have a better understanding of where are we actually on the roadmap. We don't want it to go too deep. So ideally it's holding 1820. If it's breaking below that, I think we can still give it a chance to find support at this ascending trend line. But ideally it's holding 1819, 1820. But if it goes a little lower, doesn't break below that, that would be ideal. And then we could look at a fifth wave to the upside. By that time, we may also have a clearer top in place for a B wave. That means if we go then a little lower, a break above the B wave high will be a first and early indication that a bottom has been made in this wave 4. So I explained it in the Bitcoin video that we don't want these wave 4s to be too shallow, because if they are, we sometimes don't really know, okay, are we still in the third wave, you know? Or is it already the fourth wave? And then you sort of are left with a little bit of an unclear situation as to where you don't know, okay, are we still in the third wave? Are we already in the fifth wave? So if we have a decent pullback, it gives us some clarity. It's about the breathing in, the breathing out of the market. Yeah. Also, a market needs to recover, needs to breathe. You can't just go one way. And it's good that the move down currently looks fairly corrective. So you have a bit of overlapping price action here. That's what we want to see. We don't want to see an impulse to the downside, because it would unfold then most likely as bearish wave count, or at least short-term bearish. How does the short-term bearish wave count look like? And again, that's not what I see at the moment. At the moment, further continuation to the upside is preferred. If that changes, I will let you know. We need to be very flexible in the current market conditions. The idea is that in a more bearish wave count, this here was just an A wave, or the move down of the April high. The move up now is a B wave. That will get much less likely if we finally get 5 waves up. But at the moment, we only have 3, so I cannot rule out this count. And then a C wave to the downside could still unfold to around about 1534. Yeah, this is a situation that would be very annoying, but of course possible. Showing you that, you know, some profit taking along the way is probably never a bad idea, but eventually you have to decide that, because it depends on your personal goals and strategies. That's my update about Ethereum. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.